Hello everyone, and you're very welcome to today's webinar on navigating revenue's enhanced reporting requirements. I'm Holly and I'm a Senior Marketing Operations Executive here at Bright, and I'll be hosting today's webinar along with my colleague Elaine, who is a Content Marketing Specialist here at Bright. Later on in the webinar, we will be joined by Paul Byrne, former CEO of Bright, and Mark McDonagh, who is a Payroll Product Manager here at Bright. And Paul and Mark will be joining us for the questions and answer session. So if you do have any questions along the way, please type them into the questions bar on your control panel and we will get through as many questions as possible. So first off, I'd just like to introduce Bright, and Bright is home to multi-award-winning payroll, accounting, practice management and tax software. So I'm just going to give you all a very short introduction to each of our Bright products. BrightPay is payroll software that makes managing your payroll quick and easy, and it's currently desktop-based. Accountancy Manager is a cloud-based practice management software designed to lighten your workload by automating your admin. Surf is a cloud accounts production software with the bookkeeping module Surf Accounts, and BrightPay has direct API integration with Surf Accounts, allowing both the payroll software and accounting software system to directly communicate with one another. And Bright Propose is a software where you can create professional proposals with ease, you can add your branding and quote accurate prices. So let's take a look at what we will discuss on today's webinar. So first, we will explain exactly what revenue's new enhanced reporting requirements are and what it means for businesses. We will look at which expenses and benefits should be reported and how the information will be reported to revenue. We'll look at how your business can prepare for the changes and how our new product, BrightExpenses, can help make the introduction of E/R as seamless for employers and payroll processors as possible. And as I mentioned later on in the webinar, Paul and Mark will join us for the questions and answer session. And just to mention that both Paul and Mark are both chartered accountants and both past chairpersons of the Payroll Software Developers Association. Just so you are all aware, the webinar is being recorded, and later on you'll all receive an email with a link to the recording, so it's no problem if you do need to leave at any stage. And also in that email, I will include the handouts that we're using today, and also a form if you want to keep updated with BrightExpenses. Also, this webinar is CPD accredited, so if you would like a CPD cert, you can request this in the survey that will pop up on the screen once we've ended the webinar, and I will remind you of that again towards the end. So I'll now pass you over to Elaine to begin today's webinar.
Thanks, Holly, and hello, everyone. From the 1st of January 2024, the introduction of Section 897C of the Taxes Consolidation Act 1997 into the Finance Act 2022 will require employers to report details to revenue of certain non-taxable payments made to employees. Revenue is calling this Enhanced Reporting Requirements, or E/R. So where employers make a tax-free payment for one or more of the expenses which we will go through in this webinar, they must submit the details electronically to revenue. The submission must be made on or before the payment date. It is important that you follow revenue guidelines on expenses and benefits to work out whether tax needs to be deducted from these payments, as exclusions and limits apply. It should be noted that with the new requirements from January 2024, these represent phase 1 of E/R. Revenue has not yet indicated what will be included in future phases. So just before we move on, I just want to show you some results from a survey we sent to customers in June this year, from which there were 331 respondents. So we asked them, how would you best describe your knowledge of the new E/R requirements? 64% of respondents said that receiving our survey was their first time hearing about E/R. 30% had heard about ERR, but weren't fully sure what it meant, and then 5% had a good knowledge of ERR. So we do hope that this webinar gives you all a good understanding of ERR. So the three categories that payments fall under, which will need to be reported from January 2024, are travel and subsistence, small benefit, and remote working daily allowance. We recently conducted a survey of around 330 of our payroll software customers to see how many made payments to employees which fall under these three categories. 72% of those surveyed said that they reimburse employees for work-related travel and subsistence. 79% said that their employees receive rewards that qualify as a small benefit. And 11% said that they pay employees a working from home allowance. When an employee, and this includes directors, is required to travel on business journeys, the employer may choose to cover their travel and subsistence costs. Travel costs may include covering the cost of flights, taxis, or public transport. Employers may also repay employees for use of their private cars, motorcycles, or bicycles when used for business journeys. An employee may also incur subsistence expenses if working away from their normal place of work. For example, accommodation and food expenses. These are the types of travel and subsistence expenses which must be reported when a tax-free payment is being made. So these include travel vouched, travel unvouched, subsistence vouched, subsistence unvouched, eating on site, site-based employees, and this includes country money, and emergency travel. Vouched expenses are those for which supporting documents or receipts are provided as evidence. Unvouched expenses, on the other hand, are when there are no receipts or other supporting documents provided. Eating on site and expenses related to site-based employees are most common in the construction industry and is where employees may be required to work at different sites or locations. Travel and subsistence may be paid tax-free to a site-based employee up to a certain amount if they meet revenues conditions. So site-based employees are defined as an employee who has no fixed base and performs substantive duties for the employer in different locations for periods generally longer than a day. Expenses for travel and subsistence, including country money, not exceeding €181.68 per week, may be paid tax-free. The location must be more than 32 kilometres from the employer's base. And for employees working in the construction and electrical contracting sectors in the Dublin area, travel and subsistence may be calculated by reference to the distances from the GPO. So this can be treated as the employer's base, provided this is used on a consistent basis. And there are some exclusions, which include if the employee incurs no cost in getting to and from the site, so that is if the employer provides transportation, if board and lodgings are provided by the employer, and if the employee is recruited to work on one site only. The eating on site allowance is paid to site-based employees in some sectors of the economy, provided that the following conditions are adhered to. No facilities are provided by the employer for eating lunch or making tea, coffee, etc. The employee is in receipt of no other form of tax-free subsistence payment. The employee works on site for a minimum of 1.5 hours before and after normal lunch breaks. And the eating on site allowance is no more than €5 per day. You might also be wondering what qualifies as emergency travel. Emergency travel to and from a place of work qualifies for reimbursement without the deduction of tax, provided that there are no more than 60 per employee in any one tax year. The situation requires immediate or urgent attention. And if the situation was left unattended until normal working hours, the consequences would be serious. So just to clarify, an emergency does not include replacing a scheduled member of staff who does not turn up for work, assisting with an increased volume of work, or attending to a non-emergency or other routine event. So what should be reported to revenue when reporting travel and subsistence payments? You will need to report the amount of each payment and the payment date. If you choose not to reimburse your employee for these expenses, the employee may claim a tax deduction for any necessary travel and subsistence expenses incurred. They can do this by submitting a claim to their local revenue office. When claims are made this way, they should be made after the 31st of December of the year which they were incurred. So the next type of benefit you must report the details of to revenue under ERR are referred to as small benefits. Since January 2022, employers have been allowed to give employees up to 2 tax-free small benefits each year with up to a combined value of €1,000. These benefits are usually given in the form of a voucher, which can then be used to purchase goods or services, or it could be a tangible item. Small benefits cannot be redeemed for cash, and it is only the first 2 benefits given in a tax year that are tax exempt. When you're reporting small benefits to revenue under ERR, you must report the value of the benefit and the payment date. The last tax-free expense you must report to revenue under ERR is related to remote working. Employers may choose to pay employees an allowance towards expenses related to remote working. Up to €3.20 per day can be paid to the employee tax-free. This covers the additional costs of working from home and could include electricity, heat, telephone and broadband. If the employer pays more than the €3.20 a day, the excess is fully taxable. If the employee claims remote working relief, any payment received from the employer must be deducted from the claim. For each employee you are paying a remote working daily allowance to, you are required to report the total number of days that they are receiving the allowance for, the amount paid, and the payment date. So I'll now pass you over to Holly to take you through why revenue requires this information and how this information will be reported.
Brilliant, thanks Elaine. So you may be wondering why revenue requires this information to be reported. And to put it simply, revenue is asking for this information because they want to improve their system for monitoring and intervening in cases where employers may not be following the rules. By collecting this data, they can allocate their resources more efficiently, focusing on employers who may not be compliant with tax regulations. This will help them make better decisions when it comes to policies related to finance and provide more transparency and reassurance for employees regarding payments that are not subject to taxes. The main thing businesses and payroll processors can do now to prepare is to familiarise yourself with the enhanced reporting requirements and the rules around taxable and non-taxable expenses and benefits. At Bright, we're committed to assisting you every step of the way, and our team is working closely with Revenue to ensure seamless integration with their systems. You can have confidence that our various payroll solutions will facilitate easy reporting with minimal disruption to the payroll process that you're already familiar with. As we approach phase 1 of this new requirement, we'll be supporting you with webinars and guides to keep you informed about any additional requirements or changes that may impact your business. In the coming weeks, Revenue will begin providing information sessions on enhanced reporting. And these sessions will give an overview of what will need to be reported to Revenue and how their system will work. To give you some more stats from our survey of 331 of our customers, we found that 18% of those surveyed reimbursed employees' expenses as part of the normal payroll run, and 31% reimbursed employees as soon as they submitted a claim, and 23% reimbursed both through payroll and on an ad hoc basis. And lastly, 28% said that there are never any travel and subsistence claims. So just before I move on now on how this information will be reported to revenue, I just want to promote our upcoming webinar on the 4th of October on preparing for tax season and can you automate the paperwork. So this webinar is on the 4th of October at 11 AM. So I'm just going to launch a quick poll on screen now. So if you do want to be automatically registered for this webinar, you can click on yes, and we'll send you on the confirmation email later on today. So I'll just leave that up there for a moment. Great, thank you to everyone who voted in the poll there. So moving on, how will this information be reported to revenue? Revenue through ROS will provide a means of manually submitting E/or details, and this facility will be similar to that used currently for processing payroll and payroll reporting. So at Bright, we are working hard to develop our own system for E/or BrightExpenses. Through BrightExpenses, we will offer an alternative to Revenue's manual system to help you save time and provide more accuracy when reporting. With BrightExpenses, we also hope to provide guidance to users in relation to qualifying criteria and backup documentation required in the event of a query by Revenue. We aim to design our system in such a way that where travel and subsistence is paid as part of a normal payroll run, the relevant E/or submission can be made as seamlessly as possible. This is why BrightExpenses will be integrated with Bright's payroll solution, BrightPay, Thesaurus Payroll Manager, and Surf Payroll. This means that any non-taxable expenses inputted into the payroll software will flow directly into BrightExpenses. BrightExpenses will also be integrated with Revenue, and so this information can then flow from BrightExpenses to Revenue. So I'm now going to hand you over to Paul to show you the software in action.
Okay, thanks, Holly. Yes, as Holly said on one of the survey screens there earlier, expenses are paid in multiple ways by employers, and paying through payroll is a kind of a small enough subset of the overall expenses paid out. But we do have to try and capture the information when expenses are paid through the payroll, and this is I don't actually have the BrightPay screens at the moment, so this is this screen from Thesaurus Payroll Manager where a user has entered, say, expenses of €60 in the weekly input screen. What will happen then is a screen will pop up to do with the enhanced reporting requirements, asking for an analysis of that €60. Now, there will be some intelligence built into it that it'll know that if it's expenses that is under the main category of travel and subsistence for E/or purposes, and then the user will be asked to give an analysis of whether it's vouched, unvouched travel, vouched, unvouched subsistence, etc. It is quite possible in a lot of cases that expenses will be paid, but don't necessarily fall under any of those headings. In which case, you'd see at the bottom there, none of the above is what applies to that. So what it'll do is in Thesaurus Payroll Manager anyway, this is the way we will collect that information. We will hold on to that analysis, and then when the employer is actually submitting their PSR, we'll have a facility for transferring that information in total across to BrightExpenses. And so Holly, just want to move on to the next screen there, please. So this is effectively what we're suggesting. This is still all in development, by the way. So, you know, we will definitely have it ready for the 1st of January, but at the moment it's not fully functional. So what we can see here is that somebody's actually just under PSR to revenue. And now the screen pops up showing the analysis, the overall analysis of ERR that's been analysed during that pay period. And the user will have a couple of options here, because it should be noted that revenue will have the facility through the ROS screens of actually inputting this information manually, and Tesora's payroll manager and BrightPay will prepare the necessary reports to assist users to do that. But we hope that most people will go for the more seamless route, which will be sending the information straight onto BrightExpenses, and BrightExpenses will pop up basically with a submit button, you know, so it won't be a case of, you know, having to log in and all that sort of thing all over again. It'll be fairly seamless. Sorry, just the next screen there, Holly, please. Again, this is a screenshot of a sample screenshot of BrightExpenses, and it's say this is very much in development as well. And this is where somebody is actually entering expenses that are not paid through the payroll. And say we want to gather all the expenses through BrightExpenses itself and then submit onto the revenue. And there's the method that we're getting it straight from the payroll, and there's the method where people will be entering it manually, because you might just be paying it straight out as an ad hoc reimbursement of expenses or whatever. So just the next screen there, Holly. Another potential screen from BrightExpenses is, you know, what the status is of the expense submissions, you know, and you can see in that grid there what the source is. Some of it's coming from the payroll, some of it's been entered manually, and some of it's been submitted, you can see in the status, and some of it's still pending. And what we hope to do as well, that if users want to edit, amend or delete submissions that are pending or otherwise, they can do all this through BrightExpenses, so that the payroll is kept fairly simple in this case. All the payroll is doing is actually analysing for ERR purposes, but BrightExpenses does all the heavy lifting in terms of submitting and amending and editing, etc. So just the next screen there, Holly. This is just purely a screenshot, a snippet of Revenue's API information on enhanced reporting, and it's more to make the point that Revenue themselves don't actually regard this as a payroll item or a payroll issue. It's a separate API altogether. It would have been quite handy, I think, if they had included some fields within the PSR for payroll only expenses, but that's not the way it's been done. So we have to roll with that basically. So it is effectively a totally separate thing from payroll, but payroll will be gathering the information of payroll expenses, as I said earlier on. Is there another screen there, Holly? I'm not sure.
No, that's it, Paul. So just before we move on to the questions and answer sessions, I know that there's a lot of questions that have come in already, so I'll just take a moment to just launch a new poll. So if you are interested in finding out more about any of our Bright products, you can fill in the poll and we'll be in touch with more information. So just before I launch the poll, I just wanted to state that if you are already using Tesora's Payroll Manager or BrightPay or even Surf Payroll, please just ignore BrightPay in the poll, as we just don't want to be contacting you if you're already a customer for BrightPay. If you are interested in BrightExpenses, we will put that in the form in the follow-up email. So we'll just launch that now. And again, I'll just leave that on screen for a minute. Great, thanks to everyone again for voting in that poll. We'll be in touch if you have expressed interest in any of our other Bright products. So it's now time for the questions and answer session. So if you do have any questions, please feel free to type them into the questions box, and we're going to try and get through as many questions as possible. Now there is a high volume of people on this webinar, so apologies if we don't get to your specific question. We will try our best to answer the majority. So as I mentioned, we're going to have Paul and Mark on for the questions and answers. So just bear with me, and I'm going to pick a couple of questions here, and we'll go from there.
While you're looking there, Holly, there's just a couple of questions. Sorry, this is Mark here. Good morning, everybody. There's a couple of questions that are being repeated on a very regular basis, and maybe if we just hit a couple of those first. One Perfect. Is about company credit cards. Company or corporate credit cards are exempt in the sense that this ERR, enhanced reporting requirements, is only relevant where an employee has been reimbursed directly, i.e. where the employee has made a claim and the employer is making a payment to that employee. So a corporate credit card is exempt. All right. The other one that's coming up quite a bit is I've actually lost what it was. My apologies. It was somewhat related. Sorry, I've lost what it was. It's after scrolling away from me. My apologies.
Wouldn't be meals paid for by employers, no?
No, it wasn't that one. I can't remember what it was. Oh dear, embarrassing. My apologies. It'll come to me. It'll come to me. Sorry, Holly.
No problem, Mark. So the first question I have here is, are staff working in a hotel or a restaurant who get meals on their breaks included?
Mark, that is. Yeah.
Go on, Pat.
Yeah, no, I was going to say, but that's not paid directly, obviously, or it's not reimbursement.
Yeah.
But I don't think that falls in under any of the categories that we, that ERR cover at the moment.
No, not at the moment. I think, Paul, I'd agree with you. There is always as this is, a lot of these things may at some point become relevant in future phases as ERR is rolled out over multiple years. But at the moment, they are being very specific in what they are looking for. They are the 7 expense items, as Elaine and Holly alluded to during the presentation, and then there are the 2 additional ones. One being the small benefits exemption, and then the remote working allowance. And they're the only ones that are reportable at the moment. But this is phase 1. There are questions I've noticed as to whether whether there should be cycle to work schemes and things like that included in ERR. No. That's not relevant at the moment, but that's not to say that revenue won't look for that information in future phases of ERR.
Yeah, and I think it should also be said that we've been asking for, I suppose, full clarification of what each of the headings actually mean. I mean, I suppose in the early stages, we were even unsure as to what the difference was between vouched and unvouched. And I guess vouched we've landed on is that vouched is where there is actually a receipt produced, whereas unvouched would be things like where, say, mileage is paid at civil service rates, or the subsistence claims are a specific daily rates or whatever. But again, we just want to get full clarification on all these different headings to do exactly what they mean, and we'll include them in the help in the software as well.
Great. Another question here. For small benefit, can you confirm if the payment date and the date and not, sorry. For small benefit, can you confirm if it's the payment date and not date voucher bought, as these can differ?
Yeah, the date, the reportable date is the date that the employee actually has the use of the benefit. So it's not necessarily the date in which the employer purchased the voucher. It is the day that the employee got use of that voucher. So essentially, the day it was the employee received the voucher. That's the date that is reportable.
I think just on the subject of the small benefits, which obviously is mainly gift cards, it should be noted that this is potentially a bit of a banana skin for employers, in that, you know, the advertisements, etc., on the radio, whatever, would suggest that you can just give out a gift card to an employee and that's it. You know, it's exempt from tax, but it does need to follow a number of different rules. And I guess the main potential stumbling block there is whether it could come under the heading of salary sacrifice. And just to give an example, I mean, if an employee, say, was being awarded a bonus, a performance bonus or whatever, of say €3,000, and the employer decided, well, I'll pay 1,000 of that as a gift card, that technically would not qualify for the exemption, because it would be regarded as salary sacrifice. Whereas if it was just a Christmas bonus of €1,000 given as a gift card, that should be fine, unless it was a regular thing every year. It's one of these grey areas that employers would need to watch out for. And obviously revenue will be armed with all this information as to, you know, who's been, you know, giving out gift cards the most or whatever, to, as Holly put, or as Elaine had in her slide earlier on, to show revenue to where they should allocate the resources in terms of audit, etc. So it's just one of those ones to watch out for, I guess.
Yeah, in addition to that, the other one that they'll probably be looking at, Paul, is the remote working allowance, where the employer can pay up to a maximum of $320 per day that the employee has been working remotely tax-free. But employees are also entitled through their tax returns to claim the remote working relief directly from revenue as a tax credit or whatever. And what revenue will want to ensure is that an employee is not getting it, having two slices of cake, so to speak. So they'll be able to check now as to whether the employer is also paying the $320 a day, as well as the employee looking for a remote working relief. So it's a case of them validating that the claim being made by the employee is valid. They had no visibility of these payments previously. They will now have visibility of these payments. So it is revenue sort of looking for information that will aid them in making sure that people are compliant. It's all, and that's what revenue are using this for. It's for compliance and risk assessment.
And I guess the other thing as well, that in terms of visibility, the employees through their My Account with Ross will be able to have visibility of what the employer is reporting as being paid to them in terms of expenses or in gift cards or such like. So, you know, there will be a lot of visibility around this.
There will be. The other, sorry, I do remember now the question that was that I forgot earlier on, because they're still coming in. There is a little bit of confusion as to when ERR is reportable. Some people are sort of under the impression that it's only reportable if the payment is made through payroll. No, it's not. It's when the it's when the employer makes a reimbursement to the employee, regardless of which method they use, whether the payment is going through payroll, through petty cash, through an accounts, through accounts payable, or through a dedicated expense system. It doesn't matter where the payment has come from. Once the employer is making a reimbursement to the employee, it is reportable.
Yeah. And I suppose the other thing to say about that is it's reportable on or before the actual payment, which you know, it's the same kind of rule that applies to PUI modernisation and the return of salaries to revenue as well. And as Mark said, you know, it's not just payroll. If it was just payroll, this would be just an additional module, say in both the Source Payroll Manager and BrightPay. But the fact that over 50%, I guess, of expenses are probably paid outside of payroll, that's why we had to come up with this concept of BrightExpenses.
The other question that's quite common here is if the employer pays or books for accommodation or travel directly, i.e. the employee is not paying it on behalf or not paying for the necessary flight or accommodation and then is claiming it back from the employer, but where the employer has made the purchase directly of the hotel accommodation or the meal or the flight, then there's no ERR reportable. It is only where an employee has been reimbursed for an expense that they have incurred on behalf of the employer and is claiming that money back.
Hey, Mark, do we want to talk about advances? I'm sure it's there in the questions.
It is actually in the question. Yeah, I noticed one going through. I actually took a copy of it where I think the question was related to where what needs to be reported where employees are given an advance out of petty cash for expenses with receipts and balance to be refunded. Grey area, let us say.
Yeah. And we're looking for clarification as well from revenue on this.
Yeah, I think
because
the way revenue have described it at the up front is that it's not allowed under legislation. Now, we don't know, to be perfectly honest. It is a grey area. It's something that is extremely common out there. We've all seen it. So we're waiting for clarification from revenue as to how that one will ultimately bear out. The one thing that is sure, regardless of whether the sort of the advance or the float is allowed or not allowed, ultimately, whatever expense has been incurred, and if the employee has picked up the tab and is reclaiming it, it is reported.
Great, thanks, Mark and Paul. Another question here, and these are probably questions for like later down the line, but will there be a penalty for late reporting, post-payment reporting? And then also, will it be acceptable to let expenses build up for a 3 or 6 month period, or even a year, and then pay them in one lump sum?
Well, into your last one there, Holly, it's up to the employer when they pay. Well, sorry, it did want the agreement of the employees in this respect. I'm not sure employees will want to be out of pocket for the best part of 12 months before the actual payment is reimbursed. But essentially, the rule is as soon as the employee is reimbursed by the employer, that payment must be reported on or before the payment day. So if the claim has been made once a year, then on that date on which the payment is made, it is reportable. If the employee is getting 52 reimbursed, if they're claiming on a weekly basis and they get 52 payments during the year, then they must make 52 returns on or before each of the individual payment dates.
As to regard the penalties or potential penalties for this, I haven't seen anything on that yet, Mark, but I imagine there will be. There will need to be an incentive for employers to be engaged with this.
I would think it's probably very much along the lines of PMOD, PAYE modernisation, in the sense that there will be an awful lot of initially they will query employers. They will give employers probably the chance to correct any issues that may or may not be there, but ultimately it will be a carrot and stick approach. We would assume in the same way as it would be for PAYE modernisation. One assumes the penalties will not be there from day one. There will be a certain lead-in time as people get used to the system. That's not to say that if they see people being completely non-compliant, as revenue will, they will come down on people. There's little doubt about that.
Do they see no information coming across at all? Yeah.
Exactly. Where genuine mistakes have been made, I think you'll find them, I won't say flexible, is probably not the right word, but they will certainly be understanding, as they were, in fairness to them, in terms of the introduction of PAYE modernisation. But as you say, Paul, if they know that a certain business has an awful lot of would be incurring an awful lot of expense type situations, and there's no returns being made, I will highlight on their internal compliance and risk systems, and I think employers can probably expect a call.
Great. Another question here: how much extra will BrightExpenses cost, and will it be office license based or client based like the SURF products?
I guess the answer there is We haven't actually figured that out yet. There is obviously a fair bit of development in this, but it will no doubt be a fraction of the cost of what's in payroll cost itself. But there will be a cost to it, but we haven't figured that out yet.
Great, thank you. Will EOR have to be made and reported together with one of the payroll runs, or will it be possible to report it irrespectively between payroll runs?
To pay it retrospective, you mean, or? I'm sorry,
Yeah,
what was the word?
Irrespectively, so between payroll runs.
Oh yeah, well it's meant to be reported on or before. So, but if it's been paid as part of the payroll run, in other words, the pay slip for the employee includes a reimbursement, it should be done the same time as a PSR.
Great. There's lots of questions coming in here just asking, is Thesaurus going to be updated? So yes, those were the screens that Paul had shown there. So these it will be available in Thesaurus, in BrightPay, and in Surf Payroll. So we'll be able to have this API in all 3 of our payroll products.
There's also questions there about whether a dinner provided, a Christmas lunch is reportable. If the employer again is paying that directly, no. Again, it's where the employee has picked up has paid for something and is then making a claim from the employer, which the employer is reimbursing.
I think it's also fair to say, Mark, that this is phase 1, and we really haven't been made privy to what will be coming in phase 2. Whether what will be included in phase 2 will be non-payroll items or payroll items. We just don't know at this stage.
Yes.
One of my own theories is that they probably want more information in terms of the unvouched expenses. If, for example, the mileage claims, they may want to get into more detail and that sort of thing. But again, this is just speculation on my part.
Yeah, the sort of things that I feel that they will be looking for, as Paul alluded to there, certainly they will also probably look for details on cycle to work schemes. They will look for information on travel saver tickets. They're not in phase 1, so it's not a requirement yet. And BIK, probably BIK-able items. They're the sort of areas I would envisage that they will look for further information on. But as yet, and as Paul said, we have been given no sort of clue really or indication as to which direction this will ultimately go. They have stated that they have a list of 23 or 24 items currently that they would like to get information on. So you can see, and this one where there's currently under the EOR, there's actually only 3, as in certain types of travel and subsistence expenses, and then you've got the remote working allowance, and you've got the small benefits exemption. So there's essentially 3 of the 24 are included in that. But as Paul said, there could well be a further breakdown of expenses. So the subcategories of expenses may increase as to the types that they want reported, and indeed the detail behind some of those expenses, such as the mileage, may also be looked for.
There's a couple of questions coming in here just on BrightExpenses itself. So the first one here is, will there be an option for employees to upload their own expenses? And another one here just asking, will there be a facility to upload a file to BrightExpenses from another software?
Very good questions. Yeah. The first one, whether an employee would be able to, well, not in version 1 anyway. We're scrambling to get this ready as it is to meet the basic requirements. But down the road, we would hope that BrightExpenses would build out to be maybe a full kind of expense management system with that very type of functionality where employees could submit expenses themselves, which obviously the employer would need to improve. What was the second question? The second part of that question, Holly? Hello?
Hello, Paul. Yeah.
Sorry, Paul, I was on mute there. Will there be a facility to upload a file to BrightExpenses from another software or CSV file?
I'm pushing for this with the development team, because I'm kind of aware that there's probably a number of expense systems out there that are probably international based, and they probably won't have the ERR functionality available in 2024. So it would be good to be able to say allow people to import CSV file into BrightExpenses in order to facilitate a quick upload to ROS, because if those people have to do it manually through ROS, and you could be talking about quite a large number of employees, it would be very time consuming.
And another question, will BrightExpenses be online or a desktop software?
It's online.
Brilliant.
Just the other thing then is just on, there's a couple of questions there in relation to what needs to be included on the ERR submission, or what will be included on the ERR submission to revenue. The employees' PPSN and employment ID are key fields in this, so that revenue will have full visibility at employee level as to what expenses have been reimbursed by the employer to the employee, what remote working allowances have been paid to specific employees, obviously through the PPSN and employment ID identifies that, and equally then with the small benefit exemption, where you have, as was alluded to earlier, where you've got the maximum of 2 vouchers in any one tax year, up to a maximum of 1,000. There are a couple of idiosyncrasies with the small benefit exemption, in the sense that it is only it's only a maximum of 2 that is tax-free regardless of the value. So if I pay, if I was to give Holly, as after her, and Elaine after today's performance, remarkable performance, a voucher of 50 quid for today, and on the next one equally another 50 quid, then that's the 2 vouchers gone, even though there's only a value of 100. It is only 2 vouchers, it's the first 2 vouchers that are given to the employee.
Thanks, Mark, you're very generous there.
In other words, what they're saying, don't give them the 50 quid, please.
Yeah.
It needs to be bigger than that.
Yeah, if it's only 2 in the year, it'll have to be bigger than that.
Absolutely. I was just trying to give an example.
Yeah. Another question, just if an individual has 2 part-time jobs, can they receive €1,000 tax-free benefit in kind from each employer?
The small benefit, you mean?
Yeah, sorry.
As far as I'm aware, they can.
Yeah, my understanding is once the employment is a different employment, because no 2 employers won't have visibility anyway. So the employer can only do what they know, and they will be in a position. Each individual employer will be in a position to pay up to 1,000 in vouchers.
Great. There's a lot of repetitive questions here.
Oh, the other one that's quite common is there is a number of questions coming in relation to the type of person to which an ERR is reportable. If the for an employer to make a return for an expense payment, the person getting the payment must be either an employee or a director. If the person making the claim is a volunteer, for example, within a charity or something like that, where they're claiming maybe a bus fare, where they're going into the centre of the city to do a day of collecting or whatever it might be, if they're a volunteer, then it is not reportable, because they are not an employee. It is specifically under the current version of ERR, it is only for expenses reimbursed to an employee of the organisation or a director of the organisation.
If they're an employee or director of a charity, it's still reportable.
It's still reportable, yeah. It's only where you are a volunteer where it's not reportable.
Great. Another question here. So just to clarify, are you saying that we have to keep making a report to the revenue every time we reimburse the employee for any form of expense, whether it be mileage, food, or other?
Once the expense falls in under any of those either or headings, yes, unfortunately that is the case. So it's going to be
it's onerous.
Yeah, exactly.
Obviously there's an awful lot of employers out there who would make random payments to employees. So an employee comes in this morning at 10 o'clock, hands in an expense sheet, an approved expense sheet, and the employer will pay that employee immediately. Under ERR, that payment is then reportable. So systems may have to change internally within employer organizations, and obviously with the consent of employees and all the rest, where expenses might only be paid 1 day a week or one day a month,
through the payroll or whatever,
are paid through the payroll. So it is going to have an impact on the way on the way employers act, and possibly with relationships that exist between employers and employees, where employees have been used to getting an immediate payment, and obviously then may require sort of staff negotiation or whatever to ensure that whatever system is put in place is acceptable to all.
Yeah, and that would probably involve changing the company handbook and possibly the employment contract as well.
Yeah. So it's not just reporting it to revenue. It may have the ripple effect of this may have impacts on employer relationships.
Yeah. Another question here, just to clarify, ERR requires the employee to be named on the reporting. So a small benefit of €500 is going to be beside the named employee on that date.
Yes.
Yeah. The employee anyway will be identified because the PPSN and employment ID are required fields. So the PPSN is the identifier from the revenue perspective anyway, so they can identify everybody from a PPSN.
Great. Do employees have any access to the data being submitted to revenue?
Well, through the My Account, they can actually log into their My Account and see what information has been reported in relation to them, in relation to expense payments or gift cards paid to them by the employer.
And the thing to remember on that is that the figures that are seen by the employee may differ to what the expenses they received through their payslip or through any other form of payment that the employer may have made. If, for example, you've got a situation where an employee has made a claim of €200, but of that €200, only €120 of that fell under the 10 items we've been talking about this morning, or the 9 items we've been talking about this morning, then they will only see the €120 on My Account, because the 80 additional amounts of expenses were not reportable. So they will only see through My Account the reportable items. The non-reportable expenses will not be visible on My Account.
An example of something like that would be if the employee had paid for repairs to their computer, say, and they were claiming that back off the employer. That's not a reportable item at present.
Correct.
Another question here, will I be able to pay expenses into a different bank account from their salary bank account through the payment file?
Not sure that is possible well, I know it's not possible in Source Payroll Manager. I'm not 100% sure in BrightPay. I don't think it is. So I'd probably have to say no to that.
Great. There's just a lot of repetitive questions here, just a lot on vouchers, which I think we've covered. Yeah, I think unless Paul or Mark, you have any other questions there that you want to answer, we might just wrap it up for now.
Yeah, there's just one more, Holly. Again, there's a slight bit of confusion that, again, is the expenses if it needs to be noted in payroll. The answer, if an employer is making a payment to an employee for expenses that are being claimed, they don't have to go through payroll. It's not a payroll issue as such. If the employer does make expense payments through payroll, all the better. That will make life easier ultimately to make the ERR return to revenue. But the payment does not have to go through payroll. But equally, once the payment is made, regardless of whether it goes through payroll or any other method, it is reportable. That's the important thing. So it's not necessarily a payroll issue. It is an employer reportable issue.
Great. Paul, any last words?
No, I think it's I think Revenue struggled with this themselves in the initial period when they were compiling the documentation, etc. That, you know, it's not, as I said, Mark said, it's not a payroll item. It would be easy if everybody paid, you know, expenses through the payroll, but that's not the way it works in real life. And in fact, most businesses, I think, payment of expenses would be more or less ad hoc than anything else. So they struggled, I think, with whether this was payroll or non-payroll or whatever. And I think they landed on it. It's not actually payroll, because you could probably say that a lot of account systems or bookkeeping systems should have the ERR reporting built in as well. But that's probably not going to happen, because a lot of, you know, those bookkeeping systems are, you know, developed externally outside of Ireland anyway, and we're probably too small a market for that sort of development to happen in those particular softwares. So you know, there's a lot going to be learned, I think, over the initial period as to how this is going to work, and hopefully work seamlessly for most employers. But it's going to be difficult for, you know, it's going to add extra time to admin and whatever. So hopefully we can all get through it.
That's it. Thanks so much, Paul and Mark. So there will be a follow-up email that we're going to send to everybody later on today. And in that, we're going to include the recording of today's session, the handouts that we've used today, and also will contain a form to register your interest in BrightExpenses. So we can keep you updated on the product development there. There was a huge audience on today's webinar. So just a reminder, if you do want a CPD cert, please do fill out the survey that will pop up once we've ended the webinar. But that's it from us. A big thank you to both Paul and Mark for coming on today for the questions and answer session. And I hope you all enjoyed it and learned something new. And I suppose we will keep you updated with any further updates with more webinars to follow. Thank you.
Thank you, everybody.
Thank you. Bye.